Well, that struggling energy sector is where Mark Luschini sees investment opportunities in the new year. As we continue our week-long conversation with our market monitors, we turn tonight to Mark for his stock picks for 2015. He's Chief Investment Strategist at Janney Montgomery. Mark, always good to see you. Welcome.
You as well, Bill. Thank you.
We are finishing 5 great years for the U.S. equity market. Can we continue in the new year in the same pace, do you think?
I don't know about the same pace, but I think directionally, yes. So we're looking for positive returns from equities in 2015. And once again, better returns than that which you should expect to get out of bonds and cash. So once again, risk-based assets we've advocated should continue to be in equities, but we do expect there to be more volatility in 2015. So investors need to brace for that, but not abandon their long equity strategy.
So as Bill mentioned, as he was introducing you, you do like some energy stocks, and let's start with your first choice here, which is I have
Helmerich and Payne, yeah.
Yeah, Helmerich and Payne, yes. HP. Why do you like it?
A couple of reasons, Susie. It's primarily North American disposed. About 75% of its $4 billion in revenues is derived from North America. It has a state-of-the-art platform and drilling rig exposure across the United States. As a result, it's a much more efficient user on the part of producers in terms of being able to not only extract energy, but move to where energy sites might be more productive. It's been beaten up clearly. The share price was halved from the high in July of this year until recently touching $60, although it's rallied here to about $67 a share. We think earnings, while they're being trimmed for 2015, still should support its dividend payout, which is over 4%, 4.1 right now to be precise. So it's attractive in terms of having a high current dividend income. And as well, the prospects that stabilization finally will come to oil prices, which is our base case, later in the second half of 2015. Yep. And share prices are depressed in that space.
Okay.
Mark, you're making a bet on home builders in 2015. They're all really kind of still waiting for buying to begin in earnest so they can build in earnest, but you're doing this through an ETF. Tell us about this one and why you're betting on the home builders.
Sure. Certainly for the home builders, we like the prospects of strengthening domestic economic conditions coupled with job growth. Obviously, as was mentioned earlier, it's breeding in terms of household formation, a wave of renters, which we think some will migrate into the home buying marketplace. And with obviously some loosening in credit conditions and very low mortgage rates, it makes affordability relatively decent. Why that particular way to approach it is rather than trying to pick the one single home builder that would stand to benefit predicated upon its home price that it locks the market into, or by virtue of the region in which it constructs homes, we like sort of a proxied approach to buying exposure to that space. And ITB, we think, is the most home builder-centric ETF, with the top 5 positions being the D.R. Hortons, the Lennars, the NV Ryans, the Pulte's of the world, representing 45% of that ETF.
All right. So, Mark, we have about a half a minute left. Tell us about your healthcare pick, Med Assets. That's MDAS on the NASDAQ. Now, this stock is trading at the same price it was at the beginning of the year. So why should people put new money in now?
Round trip in terms of share price, mostly in sympathy with what's taking place in the small cap space at large, so not that unusual, trading about 14 times earnings. It basically designs and sells software to the healthcare industry in an effort to promote greater operational and financial performance. And so we think it's a growth industry. It's all U.S. based, so should benefit from, once again, stronger economic conditions here, and as well, more patients going into hospitals for care.
Mark Luschini of Janney Montgomery. Always good to see you, Mark. Happy New Year.
You as well. Thank you. Same
Thanks.
to you, Bill.